But let's bring on board then our experts to talk more about what we can expect in tomorrow's markets. Nandan Chakrabarti, Managing Director, Institutional Research at Axis Capital, joins in, as does Sandeep Wagle, Founder and Managing Director at Aptar Technical Advisory Services. Sandeep, although we did recover from the day's low, it seems like the undertone does remain rather bearish. So how much of a resistance do you think the 5750 level plays up for our markets?
Good evening, Avan. I think 5750 probably may be cleared the way it has bounced back. The bounce back could extend to 5800, 5820. So I would talk of another percent and a half bounce back, where 50-70 points the Nifty can cover on the upside. But I would still term that as a bounce back. I mean, that is a level to go short or sell. And whether we will break these levels, because we have bounced back from a very strong support of 5680, which we have been talking of for the past 3 or 4 trading sessions. So whether it will break that, I am not certain, but say 5680 on the downside, 5700 on the downside, and 5820, 5840 on the upside is the range for the next few days as far as the Nifty is concerned.
That's the technical picture on the Nifty. But Nandan, how are you really looking at the overall market dynamics, especially the weakness that we have set in? And the weakness is not really limited to equities. The currencies also have been volatile. RBI, of course, has been, the decision has been status quo on expected lines. What are your observations?
Okay, the economic policy basically says there's something known as the holy, or nowadays unholy trinity, whatever, that interest rates and forex rates, as the INR and the capital account, well, 2 out of the 3 can be monitored and tweaked around by any central bank out of the 3. So, well, the RBI has done whatever it could do, but this basic truth remains. And it's a little more difficult problem for us compared to, let's say, Indonesia or whatever, because we have our growth problem is actually more acute compared to them. So which is why it's not a simple this thing that you just increase the interest rates like they did, and therefore, you can take care of your currency problem. It's not as simple as that for us, because we have the growth issue also. Well, there's a line which somebody famous, there's an apocryphal this thing, which says that successes are the stepping stones to utter failure. So we've done a lot of things where we've artificially stimulated the economy, just like the US did some time back. So we've had our own QE. So we and the US are actually lagging each other in terms of the things to do. The US did its QE and now it's coming out. Well, we did our QE, and it'll take some time for us to come out of that, because we've been very successful in a number of things. So we didn't see what was hitting us. Similarly, what happens is, I'll give you another example. For example, Europe, when they had their crisis, gold fell because that's the only thing they had to sell. So similarly, you see some of these aberrations in the market is because you sell what you have.
Interesting perspective there, Nandan, but let's talk more about the chart patterns with Sandeep as well, and want to address some of the result reactions, particularly an Andhra Bank and a Karnataka Bank. Disappointing set of numbers, no doubt, but sometimes one would think that the kind of fall that we're seeing in these banking stocks is rather exaggerated. Is there more downside in sight, Sandeep?
Well, looks like some of the stocks have really, banking stocks have reacted negatively. But to sell at these levels, that comfort is not coming. We have been selling at higher levels, and at this level, I still believe that stock specific, yes, the action can differ. But this is time to cover back the shorts, not to create a fresh shorts at the least. And in fact, some of the other stocks, talk of a Federal Bank, talk of a Union Bank, they have given patterns, they have shown patterns where there can be good bounce backs in the coming day or two. They are showing some positivity. So in that sense, I am not that keen on creating fresh shorts position. I think you should cover back in case you have sold at earlier levels, and probably you will get higher levels to sell.
Right. Varun Goyal also joins in on the show from Karvi. Varun, what's your reaction on the telecom stocks? They were firing in trade today, perhaps triggered by a good set of numbers from Bharti. What are your expectations on the sector now, and how do you think Arcom and Idea would declare their numbers later in the week?
Well, telecom is a top sectoral bet, as of now. I think what we are beginning to see is the return of a very solid fundamental space for most of the telecom companies. I think the pricing power has returned very, very smartly as far as the voice space is concerned. There is increased penetration of data. I think there has been a significant increase in data usage across the country, and that is going to reflect in the revenues and the profitability of most of the telecom companies. So I think what we have had was a policy-driven uncertainty and a very intense competition in the last 3, 4, 5 years. Now most of the weaker players are buying out of the market, which would mean that we would be left with 3, 4, 5 players, which would then control the overall market. So I think from this point onwards, telecom should deliver 15 to 20% earnings CAGR and remains our top sectoral pick.
Varun, talk about how you would be approaching the overall banking space, because ICICI Bank did put out a good set of numbers, although Andhra and Karnataka were a big thumbs down. Is it that clear preference of sticking with some of the large cap private banks?
Well, I think that some of the correction that is happening in large cap private sector banking space appears to be overdone to us. I think they have delivered a good set of numbers. No doubt the slowdown in GDP growth is going to hit all the banks, and we are going to see more NPAs and more provisionings in the quarters to come. But I think looking at the valuations that most of the tier 1 private sector banking names are trading, we believe that there is not much scope to go down from here, and we have incrementally turned buyers in most of these stocks.
Right. Sandeep, how would you look at some of the oil stocks? I mean, they've had two completely varied sessions. Yesterday was almost a massacre in them, and today very sharp up move. How would you trade some of these large ones, ONGC, HPCL?
Well, Ajay, the broad view still remains sell on a rise, but when a stocks fall like a BPCL fell from 325 to 290 in one single day, so at lower levels we are in extreme oversold zone, so bounce backs are likely. So yes, I mean little bit of downside is there. I mean I would still talk of a 5, 7, 8% downside in most of the stocks, but they are good sell or they can profit booking candidates at higher levels. I don't think they will cross their previous swing highs.
Varun, what's your view on a power grid and any expectations from the sector as a whole? Because when it comes to the fundamentals, there does seem to be that key problem of shortage of power.
Well, I think if you look at the broad outlook of the power sector, things are incrementally improving. We have seen significant amount of generating capacity that is being added in the country in FY13. We believe that of all the infrastructure sectors, this is one space where we see some real progress. Of course, as generation assets will get added, we will also need transmission and distribution assets to be added along the grid. So I think overall from a business perspective, this segment continues to show a little better prospects as compared to rest of the power space. Also, there is a assured return paradigm with which most of these companies function, which gives an extra comfort in these volatile times. So I think some of these utility ideas definitely look attractive in the current environment.
Sandeep, how are you looking at Titan on the charts? I mean, it has also been extremely volatile, especially first the price damage had been because of all these curbs coming in on discouraging the general public to buy gold and jewelry, etc. But ever since the RBI measure of allowing jewelry companies to buy gold on lease has come, a lot of that price damage really got arrested and recovered. Tomorrow, of course, earnings are also lined up. How do you see that stock on the charts?
Well, Ajay, this stock has recovered from 200 to almost 275, and at nearer 278 to 280, there is a very strong resistance. So at a current level of 263, I can talk of a limited upside of maybe 15-20 rupees, nothing beyond that. The weekly, monthly charts still remain in doubt. I mean, I don't get a clear pattern. At higher levels, I think it can witness some profit booking. So nearer in the range of 270 to 75, I would recommend booking of profits. You will get this stock on a correction in 240 to 230 ranges.
A pretty stellar run up over the last 1 month or so of close to 14%, but Nandan just can't help sticking with the banking space. Wanted you to react to Yes Bank hiking their base rate. Do you think it would be preemptive to assume that perhaps the rate hiking cycle has kick-started in India now?
Well, there are bulk borrowers and those who are not bulk borrowers, even, in the private sector. So some of them are more sensitive to interest rates and some of them are not. So I think the effect of interest rates cuts that we saw earlier should have started actually acting now, but for this whole rupee episode. So I think this is a temporary phenomenon where as we go ahead and, we're all just hoping that the rupee will be controlled. That is a big if on that. But if the rupee is controlled, I think the reversal would also start towards the harvest season. Because you see the festival season, there will be a number of things which are happening. One is the monsoons have been good. Number two, the government expenditure, they've actually, withdrawn a bit right now because they don't want to, infuse liquidity at a time when the RBI is trying to, suck away liquidity. So that will happen. So I think, and the rupee, if by then, a couple of months from now, things are controlled, I think you will see easing off the interest rate cycle at that time. So till then, if banks have to increase their interest rates, they will. So I can't, immediately extrapolate that into a falling credit growth immediately. Well, it could be. Credit growth has already fallen a lot, and it may fall. But I think we must keep our radar to run about 2 months hence from now, because the global picture may also be slightly clearer by then. So will the Indian picture.
Let's find out some of the stocks to keep on your radar. We've got Pranay standing by from our research team. Pranay.
Well, the first stock to keep on your radar is Idea, that has dialed in good gains of 8% today and surged to a fresh lifetime peak. Now, analysts are expecting a strong set of earnings from this counter tomorrow, backed by robust customer additions as well as expected traffic growth of nearly 4%, accompanied with improved realizations after the tariff hardening that we've seen. And dealers have also indicated significant accumulation by HNIs in trade today. So there is widespread optimism around the counter. As per the ET poll, we're expecting a 31% jump in the profit sequentially, accompanied by a 5% uptick in its revenues, while also expecting about 65 basis point expansion in the margins to come in at 28.25%. Next one is Motherson Sumi, where a lot of savvy money managers have turned bullish after its first quarterly earnings have exceeded the expectations with a 9-fold jump in its profits and also adjusted profit expansion of 200 basis points in the margins that we've seen in this quarter, even as the sales have just grown by 12%. So management has reaffirmed its faith in meeting the growth guidance despite the challenging environment conditions in the industry, and also it has reiterated its confidence on the margin expansion from current levels.
Right. Sandeep, what are the top stocks you are recommending clients for trading from here on?
Ajay, I have a sell in United Phosphorus on every bit of an up move. I would sell it with a stop loss of 133, target of 118. And I have a buy in Aditya Birla Novo on every correction. Stop loss of 1134, target of around 1200 to 1220.
Varun, what is it that you would be looking at as good buying opportunities?
Well, I think private sector banks are definitely becoming quite cheap. Of course, there is a negative momentum with most of them at this point of time, but I think there is enough upside to be there to be seen if one takes a 12-month kind of a horizon. So we are definitely looking at picking good quality private sector banks both in the large and the mid-cap space.
Right. Nandan, before we wrap the show, what's your observation of some of the price damage how private sector banks have seen and ownership patterns also? Because see, for example, Yes Bank has just indicated a hike in base rates. Does it show that other banking stocks would also follow?
So yes, I mean, there has been, and they continue, anecdotally we know there has been some, loan migration from the private banks into the PSU banks. So I mean, bad loan migration, let's call it a bit of a bad loan migration, and this is what we know only anecdotally. But what I think is PSU banks, what happens because it's so opaque, the prices have only fallen to a level which are sort of justifying through historical levels, 0.5 times book or whatever. So people haven't really understood what the book is yet, and I think it will take some time to figure out what is the book. Whereas for private banks, I think it is far more transparent. So when you see that public sector banks are already at 0.4, 0.5 times book, and you have to sell what you have. So as I said, successes are the stepping stones to utter failure sometimes, and you sell what you have. So I think a combination of these sort of reasons are what makes private banks weak right now. because they're more transparent. And the third thing, as I mentioned, is some banks could have, are more sensitive to interest rates than others.
All right, gentlemen, it's been great having you. Thanks very much for taking the time out and joining in with your expert opinion on markets tomorrow.